Hi everybody, this is Tim from Trading Strategy Guys. Today I'm going to show you a strategy that many big bankers like to use. It's a simple candlestick pattern that can be quite profitable. But first, let me get a couple of other things out of the way. I wonder if you guys could give me a little feedback. Can you hear me, see my slides, so on? Mr. Ike, I'll be getting to that answer shortly, as a matter of fact. Great. Thanks a lot. I appreciate it. Okay, just a reminder, if you're watching recording a video, you can click on the gear in the lower right hand corner and speed up the video, save you a little time. If you're watching live, then you get the added benefit of my sparkling personality live and in color. Also, stick around and you'll get another one of my trading maxims. Okay, let me talk about this first. This is the pound dollar I talked about last week, I think. I went short on this move down here, but I went with small size because it didn't really have volume support on it. And it did not push down hard enough to get our first target. And now it closed back up in here. So I'm out of this. I took my loss. Took my loss graciously. Remember, our first job is to protect our account. So if the trade isn't working the way you anticipate, you need to shut it down. And plan that in advance too. Fly by the seat of your pants, because you'll end up going, well, let me just see what it'll do, and end up losing more money. So my plan here was to take the loss if it closed back in the trigger zone. Well, it closed, right at the top of the trigger zone. So I'm out of that. Update on the Tesla trade. Got short right here. Huge volume right here. Took half profit at the ATR, which was $9.62. Hey, I have this tool too. Let me see how well it works. Got in right here, took profit right wherever 962 was, right here. Set the stop on the second half to break, just kind of letting this thing float a little bit. I think there's more downside in it. It's making a bearish kind of pattern right here. A couple of candles is not really a big pattern thing, but it seems to be, on the shorter time frames, it probably looks like a nice bearish descending. What am I trying to say? A descending channel. Okay, I'm a little tongue-tied this morning. Oswald, why loss? Why not bought? Because I did not get a buy signal. Okay. Anyway, I am still a little concerned because we've still have reducing volatility on this. So just keep an eye on it. I'm in this. I still think there's downside here. There's been volume on the downside moves, not quite as much volume on the push up. So I just the way this looks. Okay, moving right along. I apologize in advance that I'm new to my little drawing tool here, so bear with me on it. Yeah, great. Seems like my drawing tool is stuck in drawing mode. There we go. Okay. So, well, Still stuck in drawing mode. There we go. Okay, so let's move on to this candle pattern strategy. This candle pattern was identified by hedge fund manager by the name of Tony Crabel. He's known as the father of the ORB pattern, otherwise known as the opening range breakout. It's regarded as the most powerful tool of the last 25 years. Legendary guru trader Larry Williams used it to turn $10,000 into $1 million in less than a year. I hate using acronyms without knowing what they stand for. ORB, opening range breakout, Nr4, narrow range 4. And this will make sense to you as we take a look at this pattern. The ORB Nr4 candle pattern is fairly simple to identify. All you got to look for is a candle that is smaller, narrower in range than the prior 3 candles. It's as simple as that. The strategy is a simple breakout of the prior day's range when you identify the narrow range candle. So we're going to be looking at a breakout of this candle once we identify it. Now, I just want to be clear about something. In the past, when someone used the word narrow, I used to think that it meant small from side to side. Actually, a narrow range candle is one with a small range high to low. Okay, I just want to make sure everyone is clear with that, particularly those who are not native English speakers. Some of these things can be confusing. You know, of course, it's a relative term. When you look at the chart, the narrow range candles are the ones that are just smaller than the other ones. So tiny, insignificant candles, the narrow range candles that we're looking for. Now, ideally, this candle should be an inside candle when we look for it, meaning that this whole candle should be contained within the previous candle, low or high, high or low. Okay, but that just increases the effectiveness for the purpose of the strategy, but it is not necessary. You need to decide in advance if you're going to wait for an inside candle or if you're just going to take this trade based on the fact that the candle is narrower than the prior 3, because you will see that situation in both ways whenever you start looking for these candles. Okay. The strategy is actually designed for the daily chart, but it's been successful using intraday charts as well. I'm going to demonstrate it on the daily chart. Most of you know that I just stick pretty much to daily chart trading. I just can't focus long enough to follow short-term trades. I end up losing my focus and missing entries and missing exits and doing all other kinds of things that I shouldn't be doing, like looking at cat videos or something. So I stick with the daily charts. That way I only have to look at them for 30 minutes or so a day, in addition to the other things that I do. But that also gives me a lot of time to do other things like training videos and webinars. Okay, so here's an example of a Euro chart, daily chart, with a couple of these ORB Nr4 candles. You see, here's one. This is obviously smaller than the other 3. It is also an inside candle because it's inside this number 3 bar. Same over here. Now, there are probably other examples of NR3s, I mean NR4s, but I don't see any. Well, here's one right here. This is probably smaller than these 3 bars, although it's difficult to tell about that one. And I found a tool that can help you identify that, and I'll look at that shortly. But yeah, this could possibly be one. It is not an inside bar though, because this has a lower low than the prior bar. Okay. Okay, so here are the details of the trade. First thing you want to do is wait for a daily candle to close that's smaller than the prior 3 candles. And you should have already decided whether you're going to wait for inside bars or not, okay? So in a live actual trading situation, you're going to look at the bar close at the end of the day and determine if the candle on the pair that you're looking at is smaller than the 3 prior candles. That's it. If you see that, then you have already decided whether you're going to take only inside candles or not, determine whether or not it's an inside candle, and whether you're going to trade it. The next move is to mark the high and the low of the candle. And, you know, marking the high and low of the candle is a visual thing, but it's not necessary, because you're going to put a buy stop order a pip above the candle and a sell stop order 1 pip below the candle. So that'll serve as your marking if you want to skip marking the high and the low of the candle. Now, you guys know that I'm all about using the ATR for the stop loss and for the initial target. You can figure out the way you want to do this. Some will tell you to hide your stop loss on the beyond the opposite end of the breakout range or the breakout candle. But you do you, okay? You do what works for you. You do what you prefer. My preference is to use the ATR, and I set my stop loss at 1.5 times the average true range, and that is a 14 period average true range that I use. And I'm sharing what I do. Like I say, you don't have to do it exactly the way I do it. You may find more effective ways to do this. I use an initial target equal to that ATR. Then I take half of my trade off at the first target, and I set the stop loss on the remainder and to break even, and then I follow the stops. Okay, that gives this trade a chance to run. You know, say this all the time, the old adage of cutting off your losses and letting your winners run. That's really what this is about. This will give you a chance to you'll get some profit that'll cover your costs, and then you have your second half that will go on and potentially, you know, if you get a really big move, you can get a big second half on this. The way I like to do it is to split the trade into 2 positions and then set the stop loss on both of them and set the target on the first one. And then as soon as the target is hit, then I move the stop loss on the second half. Obviously, when you're entering this order, if your buy stop is hit, you close the sell stop. If the sell stop is hit, you close the buy stop, okay? You're only going in one direction on this. You're not going to reverse if it goes the other way, because the whole point of this is the breakout of the range. Once you've broken out of the range, the edge that you've gotten from that is no longer there, okay? And that's for the purposes of this strategy. If you have if you're working another strategy, that may or may not be the case, but for the purposes of this strategy, that's it. Okay, let's take a look at some charts. I don't know why I love the CAD yen. I like to look at the CAD yen. It's my go-to chart. Okay. Now, first thing I want you to notice is we're going to look back at the chart and find examples of this trade to see exactly what happened with the trades. These, yes, these are cherry-picked examples, okay? They're cherry-picked because how else am I going to show you how this strategy works, okay? So I don't want anybody coming in here, well, these are cherry-picked examples, blah, blah, blah. you know, knock it off. This is yes, they're cherry picked. I'm telling you that in advance. Okay. Now here's the problem. Well, here's a nice one right here. Okay, that's obviously a tiny candle. It's smaller than these three, and it's also an inside candle. So that's a nice one right there. But let's look at some others. What about this one right here? Well, it's not inside, but is it smaller than these other three? That's really hard to tell. So I went looking around for an indicator that would help us out to find these small candles, because these are a pain. And if you're going to back test this strategy and see how it works historically, you're going to have to be able to pick these candles out of a chart. So here's this cool candle range compare indicator. Okay, click on indicators. I've got it set as favorite, but click on built-ins and scroll down to candle. Wow, it's just totally not in the built-ins. Okay, let's type candle range compare. There it is. Now I click the little star here, so it's in my favorites list right here. Candle range compare. This is what it looks like. Now, this is a little tedious to look at, so what I did was I cleaned this up a little bit by shutting off the things that I don't use. You do that by clicking settings, and the only plot I want is that top one. Okay, that shuts off everything. Now, guess what? This is showing me the range of all the candles, the relative range of all the candles. Here's a tiny candle. So now I can just drop a line at all the tiny candles and then go back and look at them. So when you're back testing this, this is a great way to do it. Okay, these are just initially the tiny candles that I see here. So this candle is smaller than the prior three, and it's an inside candle because it's got a higher low and a lower high. So this is a potential candle. Now here's another one right here. This is smaller. This is also an inside candle. So if you want to trade the inside candles, that's one. Here's another one. This is nice, also an inside candle. Here's an example of one that is not an inside candle. It is the smallest. I mean, it's smaller than the prior three, but it's not an inside candle. Do you want to trade this? Well, this one, you know, obviously this one did pretty well, or did it? Because it broke out on both sides. So, you know, you're going to have to drill down, and I'll do that in a minute, drill down to see if this this actually broke out to the downside or the upside first in your back test. Or if you decide you're only going to use inside candles, you can see that here's another one that worked out real well. Okay. Now, this is the way you want to go back test this trade. Okay. One of the rules of this trade is that if this trade does not trigger within the first 5 hours of the day, then cancel the orders. So we're looking for this thing to trigger during the Asia session. So what you'll want to do then is, you know, if you're trading this live, you're going to know, you know, if your bar closes at 5 o'clock New York time, you're going to know at 10 o'clock New York time if your trade's not triggered, you just close those trades. Okay. For the purposes of back testing, you're going to have to drill down. Find the trades. It obviously didn't. My lines are only showing on the daily here. So let me set my lines so they show on the hours. Yeah, it should be showing on the hourly chart. Let's just mark off the top and the bottom. There's the top. There's the bottom. And let's make sure the visibility on these lines are good. Yep, that'll show on the 1 hour. All right, here we go. So here's the low, here's the high. The end of the day was right here, 1600. I'm in Texas, so I'm an hour behind New York time. So 1600 is the close of my day. So this thing triggered the high 1, 2, 3 in the 4th hour. So that's valid. And my stop is down here. So if I'm using my ATR, it likely hit the ATR somewhere in here. So that would have been a nice successful trade. Second half probably would have stopped out break even on this bar right here. So that's how you can back test this trade. Go back and see how it did. I highly recommend back testing strategies, and the reason is not only to increase your confidence in the validity of the strategy or the success of the strategy, but also so you have an intimate understanding of how the strategy works, so that you can make adjustments when things go bad, and things do go bad sometimes. Okay. Also, remember, the way you manage your trade can make and break you as a trader. I know that's not the fancy, sexy stuff. All the sexy stuff is the entry indicators and so on. But what really makes you successful is going to be your management of the trade, and you need to plan that in advance. Okay, that needs to be part of your trade plan. Exactly how you're going to handle each situation going forward throughout the trade, no matter what happens. If it drops, if it goes up, if you hit your first target, how you're going to follow stops, all those details. Okay. Sorry, I haven't followed the chat, so let me see if I can answer a few questions now. Let's see. Oswald, you asked about profit in Apple. I'm not really a fundamental guy, so I look at the fundamentals just so that I have some idea what's going on with the pair, but I typically don't. And I'm sorry, I know your comments here were in context with what I was saying, and so I don't know exactly what I was saying at the time. So I'm going to have to skip over. If you have any specific questions, so just go ahead. Am I talking stocks or Forex? Forex. This is definitely a strategy for Forex right here. Most of what I do is Forex, Oswald. I do trade stocks. The analysis I do each week are the stocks that I'm looking at and trading myself, and so that analysis is my personal trade analysis. Okay, so I try to follow through on all of those and make sure everybody's up to date on those. Okay. Danis, I hope I pronounced that right. How do I predict the day trend? In this case, for this strategy, I don't worry about the day trend. I worry about the breakout of the range. This is all about the breakout of the range. Now, typically the breakout of the range is in the, ends up being the day trend. Okay. Sometimes not though. Sometimes the breakout is just a head fake. Okay. Hey, Casey. Good to have you with us this morning, buddy. Casey is my mentor and trading coach. Close of the day is a stock term, but it does represent the closing of the day bar. So, yeah, Forex continues all the time, but the day bar closes. And when the day bar closes, it tells a story. Okay. So, and things happen when the Forex day bar closes. Everything goes wacky. The spreads go wacky. All those things happen. So, yeah, the close of the day is definitely a stock term, but it still means something in Forex. So, okay. Anybody else have any questions? I have this little cool Q&A slide here that I didn't put up. The question and answer period. Oh, man. Okay, this blog, there's a blog for this candle strategy, this ORB Nr4 candle strategy, and it gives you other details and will tell you about, it'll tell you about other strategies for stop losses and all that sort of thing. So I'll put a link to that in the chat below, or in the comments below. And I'll also give you links to the other two trades, the analysis I did on the other two trades too. Okay, if there are no more questions, let's get to my favorite part, and I'm sure it's your favorite part, today's trading maxim. We're on, let's see, I do know how to put it, ATR in a label on the chart. Oswald, there are tools to do that. I wrote a tool to do that actually on MT4. But there are tools to do that. So, but I'm not familiar with specifically with any. I'll try to look one up and put a link in the comments below if I find it. Okay, today's trading maxim is number 30. The Holy Grail is the 6 inches between your ears. I love this one. First time I heard it, I laughed. Everybody's looking for the so-called Holy Grail of trading, right? The Holy Grail is the perfect indicator, or the perfect strategy, or the perfect whatever, the thing that's going to turn your $100 account into $10 million in 6 weeks, right? I propose that the Holy Grail is all in your head, literally. There's no such thing as the perfect strategy or the perfect indicator. All there is the perfect mindset. Psychology is significantly more important to trading than any entry strategies or anything, because if you've got your head right, you got your mind right, then you got to find something that works and then stick to it even when it's not working. Casey says I've got this part of trading down pat, because I have traded strategies, losing strategies for months. No, let me go back. Let me say that again, because I don't want anyone to misunderstand. They were winning strategies for months. The market changed, compressed, whatever. The strategies quit working, and I stuck with them. Sizing down. I size down when things start to lose, but I can stick with the strategy through thick and thin. There comes a point in time, though, that you've got to say, okay, this one obviously is not working. We're going to have to figure out why, or we're going to have to find one that does. But that's the reason why you've got to backtest these strategies, so that you intimately understand how they work, why they work, what works about them, what doesn't work about them, what sort of markets they work in, and so on. But I digress. We're talking about the Holy Grail between your ears. your brain. Okay. Holy Grail is the automation of the double zigzag, no repaint strategy. Okay, guys. Are there any more questions, comments, opposing viewpoints? Just so you know, I'm not against opposing viewpoints. I welcome them because they make me think too. Because if you disagree with me and you ask me to explain myself or whatever, you're making me think. You know, is my thing, whatever I'm thinking, is it valid? And so I set out to prove that it's valid. And if I, in the course of proving that it's valid, prove that it's not valid, I'll change my mind. You can change my mind. Okay. You guys are awesome. I appreciate every one of you. I appreciate your comments. I appreciate you guys watching and subscribing and all the stuff that you do. If this video has helped you, this webinar has helped you, please click the thumbs up below and hit that bell, because that way when a new video comes out, you'll get notified. Our current plan is we do a video on Monday and Friday, an analysis video of whatever it is I'm looking at. And we do a webinar on strategies on Wednesday. So if you guys have anything that you particularly want me to analyze, please post it in the chat or comment at Trading Strategy Guides, or send an email to info@trading. Just let us know. You can find me on Twitter at isitcoffeeyet. That'll be in the description below if you want to do that. Let us know what you want us to look at, what you want us to analyze, what strategy you want to look at, whatever. And we'll do it to the best of our ability. Okay. Listen, you guys have a great week, the remainder of your week anyway, and I'll see you next time.